today I'm joined with Bruce Norris. He is an investor, real estate educator with over 35 years of experience, a true real estate timing expert, and he's been kind of a personal real estate mentor of mine for many, many years, going back probably about 15 years or so. And I'm delighted and excited to have Bruce on the show. Welcome, Bruce.
Dave, thanks for having me. I appreciate that.
Yeah, thank you. So today I wanted to focus on kind of understanding the market because I feel there's so much noise going on with real estate, and you have a lot of sensational people and videos and articles talking about a looming crash, but then we're seeing the market just being very resilient after COVID. And so I wanted to kind of give people a bigger overview on what's happening, what to expect in the market. But before we dive into that, because that's going to probably take a while, I wanted to have you share kind of a bit about your real estate background, what you've seen over the years, and kind of how you are able to time the markets. And for those people who don't know Bruce is in California, in especially the real estate investment clubs. He is one of the most sought out after speakers over the past 20 years. He's been able to, in 1997, he came up with this report saying California real estate is going to double in the next 8 years. But this was after many years of a lull, which is an amazing thing to call. And then in 2005, 2006, he came out with the report that said, it was called the California crash. That he basically forecasted the California downturn in 2009, 2010, that area. And then in 2009 or 10, I remember going to a few of your seminars, and you were saying this is the lifetime of an opportunity of a lifetime, and you were just encouraging people to double down and to get as much as they could during that time. And over the years, I've been just fascinated by how you're able to do things that seem contrarian. When the mood is just super pessimistic,
right.
You've been like, this is the opportunity of a lifetime. When everyone is saying bubble, or when everyone's saying this is going to the moon forever, you're like, wait a minute, it's going to crash 50% or more, in a few years. But I haven't been able to see someone over the past 25 years or so been able to call the ups and the downs on both sides,
Yes.
Multiple times over the years. I mean, everything hasn't been exactly perfect to the point where you don't have a crystal ball. You don't know what's going to happen exactly in the next few years. But to be able to do that and to use your data and statistics, it's just been mind-boggling. So, yeah, can you kind of give people kind of a glimpse into how you do what you do?
Sure. I started investing in 1980, so I started flipping properties, and everything was pretty normal. Real estate in California just went up, and that was what it was supposed to do. And I thought that's what it always did. And 89, after I had quite a bit of success. I built 6 custom homes, got done with them June of 1990, and they didn't sell. I ran a full page ad in the Palm Springs paper, and I got no response. And basically sold those over the course of the next 2.5 years. I had investors in the properties that had construction loans. I made all those construction loan payments, and out of pocket paid for any losses that we took. And the last closing was about we closed and I wrote a $62,000 check to have the investor have his return. So I guess that's called personal short sale. And you kind of remember stuff like that. Mm-hmm. So what was interesting too was, as a buyer, who I was buying from radically changed. It went from buying from people for 10 years to buying REOs and short sales, that type of thing. I had something happen in 95 that made me think, okay, I've been doing this for 15 years and I have no idea why prices go up and down. And my son graduated from high school. I bought him a Honda Civic for $15,700, and the next day bought a 3-bedroom house in Riverside for $13,300.
Wow.
And that event, and the reason it was really stark to me was it was on a VA list. So it was up for sale for $15,000, and every VA that had an occupant idea, I'm going to live in it, got their first shot, not one bid.
Wow.
Then it went to investors all over America. They have this list. I'm the only bidder for the maximum discount. Now that'll make you think twice. Mm-hmm. I'm the only person in America that thinks it's a good idea to buy a house for $13,300 that rents for $500. And that one event coming off of 1989 and 90, I thought real estate would never go up to the bottom of now 1995, 96, where real estate clubs were just like, oh, when will this ever end? And so I thought I'd get to the bottom of it. And basically, I wanted, first of all, I figured somebody else had. That was true. So I went to the library and I pulled up any article for 25 years written about real estate price movement. So went to microfilm, read every newspaper article, magazine article for anyone that said in advance, this is what's going to happen. And that was not common at all. It was always 1 year away, or this is what did happen. So I thought, you know what? I wonder basically if it's possible to appraise the state of California in advance. And that was what I had in mind. And so for the next 18 months, all I did was collect data on every topic I could think of that impacted price movement without drawing any conclusions, by the way. And that is so important when you're chasing the truth, is don't go into it with a preconceived end result. Because I see a lot of reports. That's my, matter of fact, that's my number one question. When somebody tells me they've written something, I ask them, why did they write it? And I'm just curious, because what I want to do is know where to put my own money the safest place. That's my goal. So for 18 months, all I did was collect data, and it's so easy now. You just click on something and put a PDF behind it. You have every report in the world about something. But back then, I actually had to earn the right. I went to libraries all over California, and I had pen and paper in hand, and I literally wrote down, like if I found affordability, I would write down from 1975 to whenever where I was, 1996, every number for every city and make a chart of it. Now, I didn't know if it mattered or not, but it's what I had to do. Interest rates, unemployment, foreclosure numbers, on and on, category after category. Now, so I have all this stuff and I don't know what's meaningful. And I went to Maui on a vacation and I started overlaying the charts, because what I was trying to find was what I call an initial event. If this happens, it dominoes into other things. And I had 2 boom cycles and 2 bust cycles. And so I literally didn't know how to put them on a computer. So I laid them on the ground and I had yardsticks. And so I blocked off like one section of a boom time. And I played with the charts to see if there's a sequence. And it had to replicate or it didn't count. In other words, it had to be true the next time too. Anything that was like a false lead, like consumer sentiment, that sounds like, oh gosh, that has to be true. Nope. So, you just toss out stuff that wasn't true. And basically, by the end of 1996 in December, I had figured out what I thought was a formula for saying prices were going to go up, and they were not going up. So that's what's significant too, is that you're writing this not when the mood is wonderful. It's really easy to write something like right now, California real estate's doing really well. Well, thanks for the report. It's important that it precedes it, because then there's opportunity when the mood is down. Then if you're excited about something, then you can pick and choose and have a good time, because you don't have a lot of competition. So we wrote the California comeback in 97, why prices will double in the next 8 years. And when I would go to talk to clubs at that time, it was really well received because people were in really bad moods about real estate. But did they believe it? Nah, I don't think so. Because, first of all, I have no background I have no college education. I just am an investor that has street smarts. But I was, that's the thing about putting in writing too, Dave, when you're stuck with it. There it is, big old cover that says prices are going to double in 8 years. And then when they did, and then they overdid it. So now I'm looking at things. Now, one of the stopping points for California, that initial domino for me, is affordability reaching 17%. Now, I didn't dream that one up. That was from looking at charts. So in 1980, 17%, 89, 17%, first quarter of 2005, 17%. What happens after 17% is hit is ugly inside of 2 years. That's all it is to me, is a warning label. It says that when you're in a legitimate lending market, that there's a lot of excitement at 17% affordability. That's how you get there. It drives prices up versus wages. But if it's a legitimate lending environment, people want them and they get told no. So it stops by just natural causes. Well, what happened in 2005, we flew right past 17 to 11. So I thought, okay, is my thesis incorrect? And so probably in 07, because it had gone down to about 11%, I interviewed a lender in front of an audience of hundreds of people. And I basically just got to ask one question because it was all I needed to hear. I asked her, stated income loans, where does the stated income number come from? And she said, oh, we just make it up. And I kind of let that set in for a minute. And I realized, okay, you just basically said you commit fraud on every loan application. And that's why we flew past 17%. Uh-oh. We're going to give that back. And that was before I understood anything of the Wall Street stuff. That was another, once I understood what they did, to finance all this and sell it and all that, then I realized, wow. So in 06, in the beginning of the year, we wrote California Crash. And once I understood some of the the Wall Street tricks and the leverage that was existing, I added another title. It was called Category 5 with the tornado or a hurricane in the front. So, and it is important that you be able to look at the facts and come up with a positive and a negative scenario, because I want to know that. I want to know how to get in, and I want to know how to get out. And by the way, getting out is much more important than getting in on the bottom. Getting in at a top or close to a top is very important timing wise, because once it starts to go down, you're in a different market. Because here's what happens to investors. Just for fun, let's say when we were being able to speak in front of an audience recently, I would ask an audience, or tell them, first of all, you have to be very careful in markets that you get spoiled. In other words, everything is selling. I don't care if it's on leased land, it's a mobile home, it's on a dirt road, doesn't matter. You're going to have a buyer for it. But let me ask the audience a question, really simple one, and not like it's a big difference, but how many of you, 200 people in the audience, would say, how many people prefer a two-story house? So you get 15 out of 200. I said, let's add a pool in the backyard. Now you're down to 6. Think about that. I said 3% of your audience said, I love your product. In a down market, you're going to have a big hard time. Now that's all you did. You didn't do anything really wrong. Put that on a main street. Put it on a dirt road. The things you're getting away with in a good market, you don't get away with in a down market. You have to know how to not get stuck with the wrong inventory. And so that's just part of the journey it's been. So it's a passion. This is the thing. I read this stuff to try to figure out what's next. And then there's always something to learn, Dave. That's the thing.
Yeah.
When you sit here and go, okay, well, I think I've got it. There's a line in Godfather 3 where Al Pacino says, every time I think I'm out, they drag me back in. And literally that's what 2020 has felt like, because I'm going to mention just California because I'm most familiar with that. In 2019, we had the best set of stats ever since I've been paying attention to stats. Lowest unemployment rate, no competition from foreclosures, great affordability historically, and we have a price movement of like 2 or 3%. And historically, 15 would be no problem. We didn't go up with the best set of charts I've ever seen. And then we have 2020. So 2019, didn't that feel like a kind of a certain market? You kind of felt like, okay, things are good and they're probably going to be good. So now you go to 2020 and you have the coronavirus that lends all kinds of uncertainty to it. Lots of people have their businesses closed. And now you go up 17.5%. So someone like me who has a history of this stuff goes, okay, that is an anomaly. What happened? What happened in 2020 that didn't happen in 2019? Because the stats were safer in 2019. Mm-hmm. So that's what it's interesting about 2020. Maybe we can talk about that now, or we can talk about it later.
Yeah. I mean, I'd love to talk about it because, let's talk about actually the market right now. I think this is fascinating for a lot of people, and then we'll circle back to some of the crash in 2008. That was just, I think, some of the most crazy times. But so I watched some of your other recent interviews, and you were saying from April 2019 to April 2020, housing prices were basically stagnant. And
Yeah.
I guess this was California, $605,000 roughly.
Yeah.
Didn't move at all, basically. And then from April 2020 to December 2020, so just, in 7 months or 8 months, housing prices went up. I'm assuming this is California again, from 606 to $712,000. So 17.5% increase in less than a year. So what are you thinking during this time? I mean, because a lot of people are thinking, it's going to crash the real estate market, but then you see this, opposite effect. How are you processing all this?
Well, it's really important to have a history of the knowledge of it. So when you crash in price, again, it really helps to understand and look at all the stuff with a mind that says, okay, I don't have a preference to outcome. I just want to know what impacts price. So let me give you a couple statistics, and then you tell me what you think. When 1980, 81, 82, interest rates are basically 15% for real estate. That's the mortgage rate. Your unemployment is 10%. If I just tell you those two facts, how do prices do?
Well, I've listened to you. I followed you enough where I know it doesn't matter.
Well, but if your audience absorbs that and you say, okay, well, if you tell me that's coming, I'm headed for Dodge. Well, interesting. It depends. So what happened in the 80s, you had foreclosures go up, but they only became 24% of the market. So trustee sales, which is the final process of a foreclosure process in California, to sales was 24%. And I think what that means in the practical sense is that if you're an appraiser and then you're in 1982 and you've got a comp that's 80,000 and you got the retail comps at 130, you can throw out the 80 because it's only 1 out of 4 and there's a reason for it. It's a foreclosure, not really a comp. Go to 1990 to 96, that number changes to almost 40% of the market. Now the appraiser is going out and seeing 10 houses and 4 of them are discounted. It impacts what he can do. In 2009, they were 80%.
That's crazy.
Of the comps. They were the market. So as a flipper, I bought houses that were worth, 2 years before, 365, bought it for 65 grand 3 years later, put 20 grand in it to fix it, had it up for sale for 125 grand, and the appraisal come in at 95. Well, why was that? Well, it's because all the comps were the 65 grand comp. And the appraiser had no choice because the way the market was treating appraisers was, you're the bad guy. And if you come in at 125 on that house, we're going to have a review appraisal come in. And if it's 95, you'll never get another appraisal job. Now, if you know all that, then you just said, are they ever going to build another house in California? Well, the answer is yes. So you ought to buy a few of those because you're not going to do that at 65 grand.
Sure. Yeah, definitely. And so, I mean,
okay, now let me continue that thought.
Yeah, go for it.
So I did all that. I said all that to say this: you have to be concerned about foreclosures getting out of control to have price damage. That's why I said all that. So what are the odds of that? You have a lot of people that aren't there making their payments. Do you think the mood is let's foreclose on those people? I don't see that at all. And our lenders actually got wiped out when they were aggressive in 2009. When you were selling a house for 65 grand that you had lent 365, I think you probably have a pretty good memory for that. So you'll probably go, why don't we just tack it at the end, And foreclosures that get back to the lender are damaging to the market. Foreclosures that are bought at trustee sales by a cash buyer are not. That's a completely different game. So right now, California specifically has passed a law that says if you're the winning bidder at a trustee sale, the state of California can come over and take it from you. They're just going to keep it as a rental. So how you're going to get an overwhelming amount of have to sell properties in the California market, I just don't see it.
Yeah, I mean, so I mean, and a few other things I think you mentioned too was the super low interest rates are allowing people to just refi, stay in their own
Yeah.
houses. So you have people, and then with the appreciation going up, you have lots of people with lots of equity in their houses. So that's
Yeah.
a force going against kind of, maybe a lot of foreclosures coming on the market too. Can you expand on that?
Yeah. I mean, this has probably been the safest 10-year time period of getting loans, right? Everybody's been on good behavior as lenders. They have had no choice. So your borrower had to actually have a job and a credit score and a down payment. And then prices exploded. And the things that we did in '04 and '05 was refi all our equity out every time we had a chance and go play with it. Buy a second home, buy a motor home, whatever. This crowd has not done that. By and large, largest equity position ever, biggest percentage of fixed rate loans ever, lowest interest rates ever. Well, I don't see how you're going to create a massive amount of foreclosures on that. I don't. So what was interesting about 2020, because I really had to think about this, how do you go up 17.5% with all this uncertainty?
Mhm.
And there's always been a statement. So I've heard realtors talk about, well, the reason the volume of sales are down. So 400,000 sales basically for the last 10 years. Well, why is it low? Their reasoning was, well, we don't have enough inventory. I can tell you from looking at charts, I know that's absolutely not true. It's not true. You get the most volume of sales, and usually California has a run of about 3 or 4 years of extraordinary sales. So if you take a look at 76 to 80, 85 to 89, boom, 2002 to 2006, straight line up on what? On lower and lower inventory. You don't need a lot of inventory when there's people that have to have it. Well, that's just what happened. So what oddly enough, when you had the coronavirus occur, 45% of the listings disappeared from the listings. They just got pulled in. So that crowd said, okay, I'm concerned. No one is touring my house. It's not for sale. I'm staying here. And then they have this magic thing that starts with a 2% mortgage rate. So they just refi it and maybe they just say, heck with it. We're staying. Okay, you pulled 45% of the inventory off. Well, if your thesis is correct about inventory levels really affecting sales, then how did you sell over 120% more inventory in 2020? It's because you had the second group that had to have one. And that had to have one had the same urgency as I got to stay at home crowd. And that's an anomaly. So you literally had people that said, I have to get out of this like stacked environment that I'm in. I'm renting an apartment and interest rates are low. I'm going to go live in Riverside where I have a half acre. Whatever the reasoning was, two urgent crowds did the opposite things. One pulled the inventory off and the other said, I have to have what's there. And wow, what an interesting year. I don't think I could have predicted that. No way.
Yeah, crazy. I mean, if I could kind of rephrase it, if you can kind of correct me if I'm wrong here. So this past year, what you're saying is first coronavirus hits, people pull inventory. So you've got this kind of this period where inventory's been pulled and then people then just hunker down. Maybe they were thinking of selling, but then they say, oh, I don't want to sell anymore because where am I going to go? I'll just stay in my house, right?
Well, it's not just that they're afraid for people touring their house.
Yeah, yeah.
So they just said no. Let's stay healthy and heck with it.
Exactly. And then second thing is you have kind of this urban exodus out of urban areas, right? People, especially families living in condos and apartments, they're like, hey, I got to get out of here. I'm working at home all day long. So they're all going to, let's say, places with, a single family house is now the dream. No longer is it a condo or apartment in San Francisco anymore.
That's right.
And so you have this increased demand of that. And then you have the whole low interest rates, like getting under 3%. It's just mind boggling how low, things are going. And so you have the combination of all this stuff happening. Do you consider also the Fed printing money, increasing money supply with some type of asset inflation, meaning you have extra trillions of dollars of money going around the system. This money needs to go somewhere. Real estate stocks, they're safe havens, kind of as inflation protected assets. So do you see any of that have an impact on the general kind of real estate market and real estate prices too?
Yeah, what the Fed did was sort of give everybody assurance that, like the corporate debt, that was like a big thing, talking about, oh boy, that's going to crash. That's going to be the subprime, the next subprime event. Well, then you had the Fed come in and buy it. And I think all of a sudden you go, they basically said, you're in a riskless environment, let her rip. And now what's interesting about that, this year, we are going to produce, we're going to do a report in quarters, because there's a lot of things to think about that have to kind of unravel to me. So it's not going to be, I'm going to do the first chunk of it on February 20th, but then every 3 months, we're going to do another segment. And one of the things I really got to get to the bottom of, are we going to have inflation? Because if I had to answer that question today, I would say I don't think so. But there's a lot of smarter heads than I am that think so. Mm-hmm. And so I'm trying to figure out how they land there. Just because you throw money into a system doesn't increase the velocity. So what you said is true about the Fed, but what's happened to the velocity of money? It's gone down. And I think you need velocity of money to have inflation. Mm-hmm. You're probably much more familiar with maybe the advances in robotics or things like that, but those are deflationary events. Mm-hmm. Yeah. And so those are going to be also entering into the picture more and more, where people that know how to do something manually will just get replaced. So I have to get to the bottom of that myself, because again, as an investor, I would like to know that outcome. Now, I can tell you this, that one of the reports we did, and I don't remember, but I really tackled inflation and real estate, because I wanted to understand how real estate did during inflation. Because if I ask you that about stocks, how do stocks do during the inflationary, like 75 to 80? Was that a good time or a bad time?
Actually, stocks and real estate did pretty well. I mean,
real estate did very well.
Yeah. Yeah.
But typically, what I found out about real estate is that you own a basket of commodities. That's what a house is. So you own concrete and you own wood, and inflation takes those prices up. Well, if you have an existing one and you have a new builder who's building, and we're going through this right now. So we build houses in Florida. Well, it takes about 3 months to get a window, and wood has gone up 50%, and appliances are hard to get. And so those prices are inflating. Well, inadvertently, they're making each of my rentals more valuable when that happens, because, and we've done this study in California, but I'm sure that there's a ratio of existing homes and new homes. And when this moves up, typically the used home actually accelerates more. That's typically what happens, and actually crosses, in California, it crosses it at the peak of the market. So in 1980, existing homes were more expensive than new. 89, more expensive than new. So that's, I have to say, I don't know the statistics nationally, but I do know a basket of commodities, that's what you own when you have a rental house.
Huh, interesting. So, I mean, with housing, with kind of, let's say, velocity of housing changing hands, let's say, going down in recent years, do you think that will reverse at some point? Because, I mean,
yes.
Okay, and then what would be the scenario for that to happen? Like, how would velocity of housing go up again?
Well, think about what occurred in 2008. So you have this crash, and you have everybody pointing fingers. Okay, it's the appraiser, it's the lender. Let's do all kinds of programs. If you lost your home into foreclosure, by the way, did it take 90 days to foreclose on your house, or 3 years? 3 years.
Yeah, yeah.
So when it got foreclosed on, you had 3 years plus 7 years. You were out of the home buying business for 10 years. Well, you probably want one now. You actually can get a yes answer from a lender. And by the way, that's in large part responsible for the apartment boom. you had a lot of people go from owning to renting and had no choice. And so now that's reversing. So it's always interesting, when you speak, and every once in a while you just have a kind of a surprise size crowd. So something like 200 more people than you normally get. And this one seminar was in LA Convention Center, room that held 400 people, had people lined all the way on all of the walls standing. I was just like, holy cow. So I asked, I said this, I said, you guys are either really excited or really scared. And there was like laugh. And then somebody stood up and said, we want to know if apartments are in bubble price territory. Mm-hmm. I said, I'm not really an apartment guy, but I can ask you one question and you'll tell me. Would you currently buy your own apartment building for today's price? And there was like rolling laughter. And I said, you've answered your own question. So do I think that single families are going to have their comeback in volume? Yes. And I think part of it is demographics. I got married at 17. I was a grandfather at 35. So now your 35-year-old may not even be married. So I was a little ahead of the curve. But they're going to, as soon as they get married, then all of a sudden, doesn't that click in that we're gonna do the other things that that other people did? Probably. Mm-hmm. So I think you're going to sell. I think you're going to have more homes. Now, the one thing that I try to pay attention to is not just demographics, but also migration. So I pay attention to where people are going and what are the ramifications of who is showing up. And so that's why I no longer reside in California and I live in Florida. And that's one of the main reasons.
Can you explain kind of your decision to move to Florida?
Yeah. There were some things that happened where I started feeling uncomfortable with me understanding the rules of engagement. That's one. There were, as you speak, you go around and you speak to clubs, you just hear different laws passed in little different areas. You go, what? Oakland passed a law voted on by the public that if you had a vacant lot and you were not using it, you got fined $6,000 a year on top of your property tax. Well, I thought, why in the world would that be? But when you bought your lot, you didn't know that was coming. What if you had 10 lots? Well, as somebody that has vacant lots, that struck me as kind of painful. Because sometimes you buy lots in advance of knowing, okay, they'll be good someday. I'll just wait. Well, now it's going to cost you, if you had 10 of those lots, $60,000 a year to wait till it's good. Well, what would be the reaction would be maybe you could just have my lot. Mm-hmm. Well, see, then it dawned on me, oh my God, is that actually the plan? Do you want my land so you can use it for what you want? That bothered me. So that's those little things that are happening. We had an election where there was something on the ballot about rent control, and it was voted against. And a year later, we had rent control. And I didn't know that could happen. And so in a seminar, we had a panel of legislators come in, and I wanted to get to the bottom of how things were approved. What has to be voted on by the people? What can be trumped by the legislator? And then over that, what can be trumped by a governor? And it turns out when you have an emergency, it's almost a free-for-all. You can enact whatever it is that you want without the approval of the people. That bothered me. So now I was already out of California with a fair amount of my real estate already in Florida because of another thing, and that's migration. California right now gains population only by babies being born over people dying, period. It loses migration of adults constantly and in growing numbers, and will for the foreseeable future. Those are buyers and renters of real estate. Florida has about 85 to 90% of its growth by migrating adults. So not babies being born over people dying because they have older population. Those are on par. But in Florida, all of the gain is by migrating adults. Well, they have to rent something or buy something in real estate. That's a very impactful thing over a long period of time. Another statistic that's important of who lives here is the elderly population is the largest percentage of anywhere. Well, that sets off another chain of events. When you're 65, you have 2 medical people in your life. When you're 85, you have 7. So think about that. That means that over the course of the next 20 years, if that statement's true, 350% more migrating physicians, nurses will show up to Florida to take care of the 85-year-olds in the next 20 years. That's the safest business plan I know. I'm 68. I bet next year I'll be 69. And if I'm 85, I'll probably need a team of people. And that to me is a safe business model. When I moved a lot of my real estate holdings a few years ago to Florida, I thought the senior would be my renter. Just by luck, honestly. The Villages is the fastest growing tract, if you will, in America. So it's number one. That's where I have my rentals, close to the Villages. And where I live, Lakewood Ranch, is the number 2 fastest developing area in America. So I didn't look at that and say, oh, I'm going to go there. It just so happened that's what happened. But when I bought close to the Villages, not in the Villages, but close, I thought, who will be my renter will be a senior that doesn't want to live in the Villages, which is a kind of graded, confined area where you have a golf cart and you go to lunch and you go golfing, and you didn't want that. I thought that would be my renter. Nope. Almost 100% of my renters are nurses or doctors.
Mm-hmm.
So that makes perfect sense to me. Mm-hmm. My granddaughter got a phone call from Florida, and her husband is a male nurse, and they were offering bonus money if he would come to Florida. So it's like you're a smart tech worker, and San Jose calls you. That's what's going on in Florida. They're trying to get medical people here, and will bonus them to show up.
Awesome. Interesting. I recently moved to Texas, Austin, and the real estate market is on fire.
It is crazy. Well, but see, that's part of what this year is going to be about, because do I think that's going to stop? No. As a matter of fact, California's got some decisions to make. So one of the things we're going to talk about the next few months in these reports, we just had to prepare for, I have a radio show, and we interviewed some people that were accountants, people I've known for a long time. So just looking at some of the proposed legislation in California and for the Fed. So it's a kind of a double whammy. So I think probably we're going to have higher federal taxes. That makes sense to me. So if that goes to 39%, and you live in California, you're already at 13.3 at the top end. Well, the projected is that that's going to go to 16.3. But there's another federal adder to that. And it says that if you make over 400 grand, you're going to have the Social Security tax kick back in. So right now that ends at about 140 grand. Everybody's, paying their share. The employer and the employee pay 7 or 7.5%, and then it ends at 140 and isn't touched after that. Well, they want to reenact that after 400 grand. Here's what's significant about, and I didn't realize this till I kind of poked into it. 40% of taxes paid in California are paid by 0.5% of the households. 0.5%, 40% of the revenue. Well, you're going to, if those two things pass, the Social Security and raising the state, they'll be at a 63% tax level for the privilege of living in California. That ain't going to fly. It just won't. What's the state tax in Texas?
0.
Nothing. Yeah, nothing.
Yeah, exactly.
And in Florida.
Yeah.
So you're going to have those two areas be the destination for different things. I think tech is going to Austin, and that doesn't mean they're going to completely leave California. I've got to really study that. I don't want to say California is going to go down the tubes. I'm going to do devil's advocate and do everything I can to completely understand the whole scope of why they attract all the brains they do, But what if you add a wealth tax? See, that was the other thing. When California came up with the idea of a wealth tax, that blew me away. That was sort of the last straw, because I thought, wow, if that ever came up, I thought that would be a federal game, not a state thing. The fact that they brought that up, I went, and then they want to chase you for 10 years after you leave. if they enact that wealth tax, there's way more billionaires in California than anywhere else. Well, what do those billionaires do? You think they have 50 houses for rent? No, they own businesses like Elon Musk. And it's a good reason he's not there. So I think California has some really important decisions to make. And I don't want them to land hard. They treated me really well and I love living there. But you start taxing people's wealth that are billionaires. Well, one of the interviews I want to do in the next, I've interviewed this gentleman before, Raul Paul. I don't know if you know that name.
Yeah. Uh-huh.
Yeah, I'm sure you do. Bitcoin guy, right?
Yeah.
Okay.
Yeah.
Yeah. So I interviewed him one time because he used a pretty strong word in an article or even maybe it was a solo talk, and he was talking about a depression. And I respect him. I don't think he tossed that word around lightly. So I interviewed him because I wanted him to repeat that for the audience that I have. But you know what, if you ever watch him interview people, he's friends with these billionaires. I mean, he worked with them or he was their consultant, and maybe he's one of them. But at any rate, I think he would understand what their habit would be if you tax their wealth. I would like to know, what do you think they'll do? Yeah. Will they move out of California or move out of the country?
Yeah. Yeah. I mean, I was at the Austin DMV last month, and the person helping me was saying out of the last 30 people who had applied for a new driver's license, 20 were from California.
Wow.
Yeah. Yeah. It's crazy.
Yeah. That's when we build houses, you watch the cars coming to look at your houses. They're all from other states.
So I opened up our talk for questions. I asked people on Twitter what kind of questions they would have for you. And I had several questions that were very similar. I wanted to group together. So I know real estate can be very diverse, different markets, different states, urban, suburban, rural. So it's hard to generalize, but just wanted your thoughts on these three similar questions. So someone says, will we have a real estate crash? Is it too high now to buy a house? Another person says, I'd be curious to know what Bruce thinks if there will be a correction post-COVID or if this is the new normal. And another person says, how will looming evictions affect housing prices? Should first-time home buyers delay their purchases until later this year?
Okay. I wrote a report called The California Crash saying the prices could go down by half. So a really good question is, did I sell my house, my residence? Because that would have been a really rational thing to do. At the time, it was worth $1.4 million. And I thought about it, and I even responded to an ad of a guy that had a rental. And I called, I said, I'm not your typical renter. I'll pay you a year in advance. He said, wow, it sounds really great. He says, let me ask you a question. Do you have any pets? And there was a pause, and I went, I'm so glad you asked that question, because I just found out why I want to own a house. I don't want anybody to ask me anything. So to the people that are going to wait to own your own little square in the world, I'd say that's not the right attitude. That's not why you own it. You own it because it feels different. It does. That was a big goal for me. I mean, I got married at 17. It was 21 until I owned a house. And I literally remember mowing my grass for the first time and feeling like a man. I had my name on a grant deed. And I didn't have any equity and the windows didn't open. But that was a big deal to me because that was in my mindset. So no, don't put off home ownership. If you're looking at the chart of prices, please combine it with the chart of interest rates. Okay? Because have you ever had a chance to borrow money at this ever? Now that's a good question. Ever. So Sean O'Toole and he and I are pals. We decided to go to Washington, D.C. and go into the Library of Congress. And what did we do? We researched interest rates back hundreds of years to figure out how low these interest rates were. See, we know that these are low, like crazy low. So that's my opinion. Owning a house is something that you probably should do not because the math might be deficient in, like, you think the price is going to go down. So let's talk about price going down.
Mm-hmm.
Does it feel like the environment right now is going to aggressively go after people for foreclosures? My answer would be no. And you need that for price damage.
Mm-hmm.
You do. I mean, again, historically, if I look at something, that's the key thing. And because it messes with the appraisal world. If you have 1 in 10 sale that's a foreclosure, doesn't mess with it at all. If it goes out of control, then it's serious. But the other thing is, this wasn't the fault of the borrower per se. This was an event. I think they're going to be very lenient and say, yeah, we're going to put it at the other end. We're not going to forgive the interest rate, but the interest rate was so small, it really doesn't make too much difference. We'll tack it on the end. We'll call it a day. I think that's going to be handled. Now, the question about renting, getting your rent paid. Yeah, that's one of the reasons why I don't have any more rentals in California, because of the process of favoring the tenant. Even without the coronavirus, doing an eviction in California is no picnic. And so that's whoever's in the house is favored more than the person that owns it. So the likelihood of you getting all your rent in California this year, if you're not already getting it, by the way, that's being over exaggerated. I think in the charts I see, and I know property managers that have several thousand units, people are paying at over 95% of the clip. So do I think it's going to be a catastrophe and cause all kinds of foreclosures? No, I don't. Now, there's Wall Street's preparing billions of dollars for that event too, which prevents them from getting back to the lender and being discounted. So they're thinking, we're going to buy all these houses and rent them back to the people that lost them, that type of thing. I just don't see it getting out of control. I just don't.
Got it. And then, I mean, to your point about affordability index, we're still, I think your last month you're saying we're at about 28% in California, was it?
Yeah,
so
you're at 28. Mm-hmm. So see, that's the other thing too, is you go, okay, in California, well, what's the journey of price increases from 28 to 17? Mm-hmm. It's huge. Mm-hmm. So, that's what's interesting. California could have some pretty good years in front of it. It's interesting that it didn't happen in 2019. So I think urgency has to stay in place. Mm-hmm. For that to occur. Again, to go back to 2019, that didn't occur in 2019 with better set of charts and much more certainty. It happened in 2020 because of this colliding of the two groups. I'm taking mine off and somebody else has to have one. I think for you to have pretty strong increases, you have to have that urgency remain.
Got it. Okay, Bruce, I'm going to put you on the spot here. I'm going to ask you the probabilities in your head that you see at this current moment for the price to be higher or lower in a few markets. But a few disclaimers here. This is just maybe Bruce's thoughts right now. He can change his thoughts obviously next week, next month. He's constantly researching, so don't hold anyone to this. But just current kind of random thinking right now. California, in 3 years, let's say 2024, do you think the price will be higher in 2024 than now or lower? And what probability would you give it?
See, I know you want that answer, but it's not, I don't even know how to answer it honestly, because I don't know if we're going to have round 2 of a coronavirus.
Okay.
I don't know if the businesses that got closed are going to actually just, like, what percentage of restaurants. Mm-hmm. I'm not buying the unemployment number that we have. Uh-huh. So, I mean, I think it's probably quite a bit higher. I can tell you this, that if you have low inventory matched with this urgency, you're going to go up. Mm-hmm. That's what's going to happen. If you have tons of foreclosures, then you'll go down. But those are I don't have to tell you. I can just point to a chart and say, if this emerges, that's mm-hmm. going to be the damage path.
Got it.
So I already kind of answered it. Do I think they're going to aggressively pursue foreclosures? The answer is no.
Yeah.
Now, the other thing that's interesting in California that's not true in Texas and not in Florida is we're not building single family homes to any great extent. We built 60,000 single family homes in 2020. approximately. We built 60,000 single family homes in 1981 when interest rates were 17%. So, and a peak year for California is 150,000. So we're building at about a 40% clip during a boom for the last 10 years. Well, why that's important? When you have, and builders are the worst timing experts ever. You think they'd be the best? They're not, because when you have a boom market like in 2005 and 6, how do you go into your office as the owner of the company, say, guys, we're closing up shop. I know everything's selling, but it looks dangerous to me. We're going to close shop and buy the lots 2 years from now for nothing. You can't have that conversation, especially if you're a public builder. And because you're getting evidence that things are doing so well, so late in the game, you continue to do what you do. What happens then is you have 150,000 homes built in 2005, and they all go auctioning off themselves in the next year or two. That impacts the market. That adds to the, not only to, you have the REO pile, you have the builder auction pile, and everybody that bought a house is now in upside down territory because the builders say, I got to off the rest of this inventory. So that's not a danger for California. In Florida and Texas, we're building the heck out of everything. But the price point's different, a lot different. And interest rates, making the house payment less than rent is an amazing thing.
Yeah.
And you're getting, like you say, you're getting tons of migration into Texas. Is that going to stop? I don't think so. Mm-hmm. So if you asked me that question about Texas, I'd say it'd be higher. In Florida, I think it'd be higher. Mm-hmm. Now, traditionally, those two states don't move like California. Mm-hmm. They don't.
Yeah.
Now, will that change? See, it could. See, that's one of the things that this year I have to analyze. Okay, why did California double the median price of the nation? Because it wasn't always true. In 1974, it was $3,000 higher than the median price of the nation, 34 grand, 31 grand. And all of a sudden, we left the building and got to 150%, then 200%, then 220%. So typically what happens when we get to that level, there's a few things happen. If you're a senior and you have a house in California and you want to relocate, that money goes much further somewhere else. Mm-hmm. So you got tons of equity, and now you could literally retire in Texas and Florida and live in a much nicer house for much less money. Mm-hmm. That's part of what happens. There's people that can't afford it. They migrate out too. So the higher your price is relative to the other neighboring states in the country, you lose people. That's historically what happens.
Mm-hmm. Yeah. One of the things is in Austin the past few months, it feels like the price appreciation is so crazy in the past. So ever since realtors are saying ever since mid-December. So something happened in the markets here in Austin where things started to go 20 to 30% above listing as like very common. It just started to, and then it hasn't stopped. So the market has like the comps are literally like they're from a couple months ago, but they're like
outdated.
30. Yeah, they're like 30% lower or anything. Yeah. And so you can't. And then the inventory is at a historic low.
Well, that's what I was just going to ask you is how much inventory is for sale.
Yeah.
So once again, you have this urgency. Mm-hmm. Now, and I fit that bill. When I decided to move from California, mm-hmm. I came here with my wife and we gave ourselves 3 days to buy a house that was over $1 million. Mm-hmm. Were we shopping for a deal? No. We were shopping for our next house. So we were sort of that typical person. We had an urgency. How many people buy a house in 3 days? Well, we had the connections to say, I want every listing that matches this description for a 90-mile journey from Naples to Sarasota. And that's what we did for 3 days, is look at every house that fit that description. That's the typical buyer in Austin right now, probably.
Yeah, definitely.
They're not bargain hunting. They just want one.
Yeah, especially with the migration into the area with all these companies. Lots of people, they don't want to go to apartment. They don't want to rent, or at least some people don't. And so, yeah, it's a crazy market. I wanted to ask about your quadrant. So, I've been following you for such a long time where, I've gone through a few of your courses, and, over time shared kind of your philosophies of quadrant one is kind of the beginning of a cycle. You have certain strategies as an investor, quadrant two and three. By the time it gets to quadrant four, you have a lot of exuberance.
Right.
But it could be the best time in terms of price appreciation. It could be the highest, but it's also a place where you can get out of maybe some more problematic, some kind of properties that you're not in love with, right? That's probably the quadrant to get rid of those. If you're in love with some properties, you can stick around for the next cycle. But in this kind of view of these four quadrants, like what's going on? I mean, I've been kind of it seems like we've ever since let's say end of 2012, starting 2013, the market's just kind of gone on this like continuous. There's been a few pauses, but we haven't seen kind of a correction. And then now we're in 2021, and affordability is still a ways out. Foreclosures aren't necessarily looming in mass quantity, let's say 40% level or not. So it seems pretty optimistic for real estate. So does your model of these four quadrants, is it still applicable? Do you still
Yeah.
use that? And then how do you think about that?
Well, the quadrant system kind of came up from my own experience as a real estate investor. So when we started this conversation from 80 to 89, I ran an ad in the newspaper that said, honest investors pays cash for homes, call me first. And my phone rang a certain percentage of time, every month. I bought my share of houses. And then in 1990, about the time I had the trouble with those custom homes, my ad got twice as many phone calls. But most of them were people that were upside down. And I thought, wow, all the deals are gone. It's sort of like I thought, okay, well, the business is over. And then I asked a realtor for an MLS. And I looked in the MLS and I'm like, oh my gosh, they're sitting here. Like you could just cherry pick them. The lenders who owned the properties were putting in unbelievable prices for some of the inventory because it was vacant and it was a mess. And so all of a sudden I went from talking to only people that owned houses to talking to no one that owned houses. All I did was build relationships with lenders, not lenders. I found out that was a mistake. I made friends with the people that controlled the lender inventory. I wanted to be their number one guy. You need a cash sale? Call me. That's what we got known for. Same thing true with auctions, not trustee sales, but auctions. I learned to understand when an auction company was going to mess up. I understood what they had to do right and wrong. And when they did it wrong, it was wonderful. So we even videotaped an auction where I bought all the houses at 40 cents on the dollar because they did not know what the heck they were doing. Unbelievable. So what happened was the quadrant system basically says when we're in quadrant four, if you're a home buyer, can you chase REOs? No, there are none. So you have to deal with people that own properties. You probably have to take on the fixer-uppers, or you're going to add square footage and value to it. That's what you're going to do. Or you build houses. That's what quadrant four said. Now, as quadrant four matures, you just have to be really careful about holding the wrong inventory. What's on fire? Land. Land in Florida is going up probably 40% every 6 months.
That's crazy.
Yeah. Now, when land goes down, I mean, like 1 second after quadrant four, you get into quadrant one and you own land, it could go down by 100%. It could be completely worthless. So just to give you an example, after the downturn started, I got a call from a guy saying he got this piece of land, 20 acres in Moreno Valley, and he went on to explain it for about 5 minutes. And at the end of that explanation, I said, to be honest with you, I can't pin a positive value on what you own. I think it has negative worth. He says, yeah, I know. So the thing that was the best thing in the world a year ago, and that's why quadrant four is important to understand when you're reaching the limits. Now, affordability is one of those limits. You have euphoria going on, and then all of a sudden you get to a breaking point where lenders cannot say yes. Now, one of the problems with Texas is they've never reached an affordability repetitive breaking point because they usually don't go up in price like crazy, and neither has Florida. So you don't have that history. So that's an interesting dilemma. you also have migrating people coming in that maybe have more wealth. They're bringing in more money than Texas is used to. And maybe they make more money than Texas is used to. So you could see that continuing for a while. So quadrant one is the end of the boom. Now, if you get into a foreclosure scenario that goes crazy, well, then you change your buying habits. By the way, your negotiating skills change too. So now in quadrant two, I'm not talking to human beings. I'm talking to realtors that control inventory. That's a very different negotiation. Because what are they interested in? They're interested in the easiest commission check possible. So let's say I didn't know you. You're a realtor. You have a listing that I'm really interested in. So here's an exact example. A listing agent that knew of me but we had never met, had 3 triplexes listed in Moreno Valley for 40 grand. When I got to his office, it looked like Krispy Kreme donut. It was like a long line of people wanting to make offers on that property. That didn't surprise me. So I literally was in line with my offer. I sat it on the desk, and the offer was full price, all cash. Here's a cashier's check in full amount. He looked at me, he says, I don't see any other offers, because I had just become the easiest commission check for him. And we did business for years. So the idea is, how do you control them to say, I'm going to get first shot? When you're talking to individuals, that's a whole different skill set, very different skill set. That's the quadrant changes how the skills you need. Your team building in quadrant 2 with people that control inventory, auction companies, REOs, and short sales. And in quadrant 4, you're very good over the phone getting people to say yes to other things. Now, quadrant 2 is when prices are devastated and the mood is bad. So here's a perfect example of me knowing what to do in quadrant 2. I'm interviewing Doug Duncan, the chief economist of Fannie Mae, first quarter of 2015. To prepare for the interview, I do a study for the Fannie Mae's year of 2014, read their quarterly financial statements, and in it, it said that 25% of Florida's losses came from one state, Florida. Well, that put a big smile on my face, because California was already in quadrant 2. Well, why was Florida still in California was in quadrant 4. Why was Florida still in 2? They had a 4-year foreclosure process. I got a big smile on my face because I know what to do in quadrant 2. And you don't have any competition. You buy land. And so I'll call up my best friend Alex. I said, there's got to be a builder that has a tract of homes he can't use. And we were in escrow the next day, and that's where my rentals are. So that's the advantage of understanding where you are, because you know the inventory to chase that's not popular, and you get it for nothing.
Got it. I mean, like, let's say California quadrant 4, when did the quadrant 4 start in California? And then how long can a quadrant 4 last? I mean, is it just until it hits that, affordability and some other factors?
That's the only repetitive thing that I've ever seen. See, that's why I come to those conclusions. I'm not married to affordability. Show me a chart that tells me it's over. I want to know it's over before everyone else does. And I want to know it's over before there's ramifications to what I own, right? So affordability number reaching 17, 1980, 89, 2005. If you had sold all your stuff, you would be selling to a euphoric crowd. And 2 years later, it would not be euphoric. It would be inventories up by 300%. Foreclosures are up 1,000%. Unemployment is up. Building is down repetitively. Now, you want to know what happens in Texas? Do the study. I mean, literally, that's what you have to do. Sometimes it's industry sensitive. Now, see, so Grand Junction, Colorado, one of my first major purchases was in Grand Junction after oil shale left. Well, that town was really dependent on one industry. So there was no statistic for that. You just lost half of your workers. Your city was 50% vacant. So that was a little scary to buy in that environment. But, I did, because I thought, well, they're probably going to build another one of these someday, and I'm buying it for 25% of replacement value. So that's why I bought stuff. But when you're looking for a number that's been repetitive and say, this is the end of quadrant 4. For California, for me, it's been affordability, and you're not close to it. But I thought we were not going to follow that rule in 2019. If we didn't go up with these stats, what happens when we have worse stats? That was my mindset. If we can't go up with what this is, if it gets a little worse, then we might go down. And that's really what I thought.
I want to ask your opinion on builders. So let's say you have Pulte Homes, Lennar, KB Homes, Toll Brothers, etc. What do you think their prospects are over the next, let's say, 2 years? Do you think they will do well as companies with kind of what's going on in the real estate, or do you think there will be challenges?
Oh my goodness. I mean, I don't know what in the world they would be able to build that wouldn't sell. Now their challenge might be to get some windows. The material costs are going up because of the shortages. I suppose the shortages will get straightened out, but right now that's a challenge. So I mean, literally, when we get a permit, we order the windows. You don't need them for a couple months, but you may not get them for 3. So that's the kind of thing that we're having to do, is order appliances and windows and actually think that all through before we start building. But do I think the builders will be having a good time? Yeah, I sure do. Now, are you asking that for stock investments? I'm just
Well,
curious.
I'm not. Yeah, it's like I hate telling people. I hate telling people what to buy
No,
because
I know.
yeah, I don't
No,
want to
but
take
I'm asking,
responsibility. But
I don't have any
personally,
idea about
yeah,
where
but
builder stocks are. Are they historically high right now or
yeah.
not?
So I have been personally looking into it just because I was listening to some of your interviews, and it just seemed like builders, would be some of the companies that would do well, at least over the next few years, as we have just kind of this demand shift, it seems like. And especially like new houses, like people moving out of urban areas who have some money, tech jobs, remote jobs,
Oh, yeah.
it just seems like, they could sell as much as they build, especially in the
Yeah.
right cities.
Well, we're not building a lot of homes,
Yeah.
but we can't keep anything we finish.
Yeah, exactly. So
Yeah.
it just seems like a definitely an interesting thing. I'm wondering. I noticed like some markets have just been super strong. And do you like, for example, you have Texas, you have Florida, suburbs, California, you have Denver, Provo, lots of different places around the country. Is there some type of pattern going on? Is it?
Yeah.
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 What's your take?
In 2000 and early in 2005, we wrote a report that was a predecessor to the crash because I could see this stuff was coming. And this was called California Countdown. And what we did is an analysis of where do the migration patterns go when California reaches this affordability number. Is there a repetitive pattern? And there is. And that reacts. So you send people with money to Idaho. Well, what happens to the Idaho market? It has these people selling their house for 600 grand and they're going into a place that's 300 grand. Well, the 300 grand turns to 400 grand real quick because this guy is coming saying, oh, that's cheap. I got to have one or maybe 2. Chinese investor does that to Irvine or does it to San Jose. I was speaking in front of a group of Chinese investors, and at the end of the Q&A, and he kind of told me, I just sold like a condo in China that I bought for $1 million for $10 million, something like that. And so he just went into Irvine and said, I'll take 5 of them. And in his mindset, he expects them all to go up 10 times. Because what happens is when you get a result like that, you first of all, you kind of credit yourself. Now, I am a real estate genius. Whether you are or not, you think that, and you think that your past experience is going to be replicated. Well, that's sometimes your buyer in an area, especially if you come from an area. See, Texas, don't they love Californians to show up?
Well,
It's
some do, some
it's
don't.
cheap.
Yeah, yeah.
Yeah. So that's, I mean, if you get an interview, if you're a Texas real estate agent and somebody from California who sold a million house, you have a big smile on your face because oh, that's going to be an easy sale. I'm having a hard time hearing you a little bit.
Okay, all right.
Yeah.
Yeah, that's fascinating. What do you think about? I've got some questions from several people wanted to know your thoughts on REITs, so real estate investment trusts. Do you have any interest in them? What sectors do you think might be more interesting in terms of, for example, someone was asking, with REITs, are you bullish on REITs? For example, multifamily, residential, data center, healthcare, elderly, etc. What are your thoughts?
I'm not a pro on REITs, so I'm going to be honest with you, and it's always the best policy. I'm sure you know more about REITs than I do. Apartment REITs have probably had their day because the reason apartments had their day was people lost their homes.
Mm-hmm.
Okay, so now a lot of people want out of an apartment, I think, into a single family. You're also going to do some things that are going to benefit the housing market. So if the Biden administration says you have a $15,000 tax credit if you buy a house, that's going to help housing. It's going to help housing more in Texas and Florida because 15 grand is the entire down payment. In California, it'll mean much less. If you start forgiving college debt, the same thing. But if I had to pick a segment, I'd certainly say seniors are a segment. But it's not. I've always controlled my own investments.
Yeah.
I don't delegate it to anybody.
Yeah. I'm curious. I wanted to actually ask you about controlling your own investments with real estate because, I mean, Warren Buffett has said in the past, he likes real estate, but the big kind of challenge is the management, with tenants. And in my experience, like I love real estate. I love the concept of, kind of the ability to own something, the land, the building, the usage, to go ride the trend of a growing area, especially if it's just an area that you see in 30 years was just going to blow up even more.
Right.
But the challenge, in my experience, has always been kind of the tenant management. If I hand off property management, I don't get as much of a I'm kind of meticulous. I really want things well done. And property managements tend to, I don't know, I don't feel as comfortable, but when I manage my own properties, you get those phone calls, those text messages, something plumbing has blown up or something, I need your help right now. It's like this video of a sprinkler just like shooting up in the air, it's like, I don't know what to do. And you have to like drop everything for this stuff. What's your take on management, especially with single family houses or, residential units? Do you manage your own stuff or do you just, delegate it? How do you find the right people to do that?
Well, that is the challenge, is finding the right people. Do I manage my own stuff? No. So I'll go back to the Grand Junction, Colorado example. So this is a long time ago. So this is 84, 85. I remember this lady's name, Mary Simpson. Mary Simpson managed my properties. I never had to go there. And I was in Colorado and I was in California. She was a godsend. But how did I get to Mary Simpson? I interviewed every property manager in Grand Junction, Colorado, every one. So I was really meticulous about picking who I thought I could trust from a distance. Nothing is easy investing from a distance. I live in Florida now. I built the homes that I own in Leesburg about 4 years ago. 4 years ago. You know how many times I've gone to see them?
How many?
None.
Really? Wow.
None.
Not even after they were done?
Once they were done, I have not seen them. So yeah, when we get finaled and stuff, but no, I've delegated it to a guy, Gun Property Management, and he's awesome. I don't discount my fees because I have volume. I'm his best customer. That's what I want. I like the commission check for the realtor. I want me to be the easiest. If he calls me up and says, we got a problem, it's fix it. So I'm like you, but I delegate it. I don't want that phone call. I don't want that phone call. That would aggravate me. But he knows that he can keep those in great shape because I will say yes to what needs to be done. Mm-hmm. I don't go, can we wait on that? No, I don't do that.
Interesting.
But it doesn't take my time.
Yeah. I mean,
it also helps owning the right stuff in the right area. So California investors, by and large, what do you own as rentals? Well, you get deals on stuff. Mm-hmm. That's what happens. Okay, wow. It's not a great area, but wow, what a steal. I'll rent it and I'll make cash flow. It goes up. Well, the area doesn't really change. It can go up 300% and still a crummy area. People
Mm-hmm.
still are parking their cars on their lawns. You know,
Mm-hmm.
that's just going to be a truism about certain areas. It's always going to be a headache when you own literally when you own a property in an area. What I drive through and I think in my head, what percentage of households will live in this area? Most California investors own properties in areas that would be occupied by maybe 25% of Californians or whatever, wherever it is. In other words, the 75% of the best tenants go at the wife's going, no, don't even stop the car. I want to own my rental houses where 100% of the people would say that's safe. I'll live there.
Mm-hmm.
That's the big difference. So your
Got it.
starting point is have great inventory. And that's why the new houses is really nice because
Yeah.
it's got a big advantage.
Yeah. I mean, did it help to, in terms of management, to concentrate your real estate holdings with this new, building development you did in Leesburg, Florida, and to just kind of,
Well,
yeah.
there's a plus and a minus to that.
Uh-huh.
The minus is you can have hurricanes in Florida.
Uh-huh.
So a hurricane can go over like a lot of my inventory in one shot. So and why that comes to mind is it actually happened. We made the hurricane channel. My track of homes made the hurricane channel pretty much within a year of it being done. Now, the nice thing about Florida construction is that because of all the regulations, you're building these things to 160 mile an hour wind. You have to have flood zone over the floodplain. Oddly enough, insurance is very reasonable in Florida, even for hurricane insurance. So at the time we had 20 houses that were standing there finished, and our total repair bill from Gun Property Management was $5,000 on 20 houses. So that was nice.
Yeah.
But yes, it's easier to manage. It's easier to manage them if they're one location and nice inventory. So that is true.
Mm-hmm. Got it. So one person had a question. If I wanted to invest $20 million in cash in real estate, what would be the best thing to do? Or, I mean, obviously there's no best thing then because real estate is such a huge field. And so, so many options, but I mean, let's take it just as a game, no consequences. No, we're not telling him what to do, but just any ideas, like $20 million in cash, but you believe in real estate or something, like how can you get involved? Is it buying a bunch of single family houses? Is it buying an apartment building, commercial, something else? Like, what are some thoughts?
I don't think there's one size fits all. What we take people to Florida in what we call like a boot camp. So in March, we're actually going to do that. So there'll be people that go with us and, go see what we're up to. But before they do that, and by the way, at 12:30, that's what I am. I have a conversation with somebody that wants to go to Florida. That doesn't mean he's going to get to go to Florida, by the way, because I'm going to interview him. And what I'm trying to do is find out if you should do it. Whatever he made $20 million on, maybe is what he knows. Uh-huh. And so what I would do is if you're going to do real estate, you become your own source of knowledge. So be patient. And you know what, everybody, single families, I'm not saying it's the best thing. It's the best thing for Bruce Norris because it's what I know. Mm-hmm. And the reason I like it is I can get rid of one of them instead of a 100-unit building. Mm-hmm. I like that I have that flexibility. Mm-hmm. So is it less efficient? Yeah, as far as if you have 100 units in one spot, but can I attract a better tenant by and large? Yes. So there's positives and negatives, but $20 million. By the way, we have investors that are selling that kind of portfolio out of California and moving to Florida. That is not an unusual thing.
Sure.
I just had a conversation yesterday. So that guy's got a portfolio of pretty good sized stuff. But you do have people selling apartment buildings. We have one guy that's building 11 houses off of a 10-unit apartment sale in LA. Mm-hmm. So that's not uncommon.
Got it. I'm wondering with housing, let's say, going up, and do you have any concerns of it worsening like inequality in America?
Yeah,
with
that's
the
a
haves
great
and
question.
have-nots? Yeah.
That's a great question. And we have the solution.
Hmm.
I've been invited to speak in Washington, D.C. in front of Fannie Mae and FHA several times. And every time I'm there with an investor as an investor hat, but I always bring up this program because I think it solves what you just said. You could have a nothing down loan program. Well, you're going to give a $15,000 tax credit. Oh, but the problem with that, it costs 15 grand. Why not just do a nothing down loan program? Okay. So qualify them. You know what the safest loan is America? Go back 50 years. It's a VA nothing down loan. The safest loan by far. So, okay. What do they want? They want somebody to have some reserves. The down payment is immaterial, apparently, because if that's the safest loan, then the down payment isn't a big factor. But if you had a nothing down loan opportunity, you would give literally millions of people a shot to own their own place with interest rates that start with a 2 that would lower their housing costs forever. Do you have rentals right now?
Yes. Uh-huh.
Can I get a 30-year fixed rental rate?
No, you can't.
That's right.
Yeah, exactly.
Yeah. You see how absurd you think that is?
Sure,
You
sure.
can get a 30-year fixed housing cost while your earnings go up. That in 5 or 10 years, that loan payment will feel like a car payment.
Sure.
You could do that for America. Now, here's the challenge. Will nothing down create foreclosures? You bet. What percentage? Okay, let's say it's big, 15%. How do you solve that? Really simple. You have one foreclosure process for every 50 states. It trumps every foreclosure process. You just have one for this program. If you're 6 months behind, you have an opening bid at the trustee sale. Is the opening bid having anything to do with the principal? No, that stays in place. The opening bid is a late payment. So you got a $250,000 loan at 2.5% interest, and it goes up for sale after 6 months payment. What's the opening bid?
Pretty
12
high.
grand
Yeah.
or less?
Mhm.
Nothing. Well, that's who gets to take over the principal. Did anybody lose any money? Nope. Give first shot to the homeowner, the next homeowner. So let's say you have a guy that wants in. He's self-employed. He doesn't qualify for the nothing down loan program, but he bailed out the system and bought that house and put up the down payment. That's called a simple assumption. Years ago, when I first bought my first house, I didn't qualify because I probably couldn't have. I took over somebody's VA loan, what they called a simple assumption. You sent in the paperwork, not your financials, and a $45 check, and your name took the place of the guy that was on it. Period. That was it. That's what you create a loan program that has a simple assumption clause that whoever is next writes a check for the processing fee, and is now the owner of the house and the loan. Done. That would reach across the aisle and make a lot of people homeowners that have never had a chance.
Huh.
That would be a very smart social move
Yeah.
without any financial ramifications. If you sell 1 million more homes at 15 grand a pop, that's, to me, that's a waste. No reason to do that.
Yeah. What that's fascinating because just like a few days ago I was thinking about this issue and I was like, yeah, if the government could actually, do something like a no down mortgage backing, and then also if they could even somehow get rid of the private mortgage, insurance part of that for, low down payments, if they can back the mortgage themselves,
Yeah.
that would be the biggest kind of enabler for low income Americans to get into housing, which in the next 10 years and 20 years, there's going to be, it's hard for me to see like, if we don't do something, we're going to possibly, there's going to be, more of the have and have nots,
Absolutely.
Yeah.
It's a very dangerous, very dangerous time that we've got where we have like the stock market, it's everybody that's got stocks are like, wow, this is wonderful. And Bitcoin and houses and all that. Well, if you don't have a thing, well, man, you just feel like I just got buried again.
Mm-hmm.
All the stuff is going up and I can't get in and maybe never get in. That feels bad.
Exactly.
Plus, for me, I mean, I had pride of ownership, man. by the way, that house I told you I didn't
Yeah.
sell, I sold that ultimately for 750 grand.
Oh,
So
wow.
hanging on to
Yeah.
that house cost me 650 grand. Would
Yeah.
I do it again? Absolutely.
Yeah.
Because I didn't want to ask somebody if I could have a pet.
Yeah. Yeah. One of the things I've personally gleaned from real estate, but also some of your just pondering, kind of thinking about some of the things you've said also over the years is there's a bullishness about long-term real estate that I don't think the general public completely understands, like in its essence. But when I look at real estate, it's something that because of the law system and the legal system and political stability, et cetera, you practically own, that, or the rights at least to that piece of land forever. You can transfer to your next generation. They can transfer. Of course, we don't know
Yeah.
what's going to happen 100, 200, 300 years down the road. But the concept is this thing is like transferable over many, many generations. And it's a proven thing of value, to have something, especially in a place where it's desirable, people need a place to live. And so in some ways, when the market goes down and let's say people's sentiment toward housing is pessimistic, they're like, oh, it's never going to come back. I remember in 2009, 2010, the sentiment was so pessimistic, like just,
Yeah.
people just didn't want to touch housing, etc. But then I'm like, you guys don't understand the essence of ownership of real estate is immensely powerful because of its time frame. It's, there's no end to it. What are your thoughts of that angle?
Oh, I mean, to me, obviously, it's very important. Owning real estate changed my life. I went from not owning a house to owning a free and clear house in 4 years, just because the real estate went up. So I didn't even have a rent payment anymore. That changed what I could do. It was a big deal. It's interesting. There's some tax laws that I'm glad they're there, but I'm kind of surprised too. So I just sold a residence for about 500 grand more than I paid for it. Did I have to pay tax on it? No. Any other asset you can do that on? No. I bought a property. I just closed the escrow on this. I'll just use two examples. Bought it for 80,000, sold it for 460, owned it for 10 years, got to depreciate it as if it was going down in value at the same time it was going up, sold it at 460 and bought two new houses with it in an exchange. Didn't pay any tax on that gain. So real estate is pretty protected, So I always think there's a room somewhere where people are going, okay, how do we tax this stuff? And those rules are still in place. I got to do a 1031 exchange and not pay tax on a big gain. I got to depreciate an asset that went up the whole time as if it was going to go down to zero. And I got to sell a residence that I can do every few years and make 500 grand and not pay a tax. Mm-hmm. Those are big gifts. Mm-hmm. If you sold your stuff in stocks, is there any such thing? Can you exchange that?
I wish. I've always wished that there was a 1031 exchange for stocks. That would be my dream.
That's right.
There's also the mortgage interest deduction, for your personal residence. That's a great, tax benefit as well.
So I think those benefits, if they extend those to millions of more people, I think you'll have a happier society for sure. Mm-hmm. Absolutely. Because what ends up happening, as soon as I end up with a free and clear house, guess what I got? I got a credit line. Mm-hmm. And I became an entrepreneur. It's like, holy cow. Yeah. I don't have to have borrowed money. I have it like in a savings in a kitty, and I only use it for a profitable thing. So I'd run out and buy a house for half price and use my credit line, pay off my credit line, and keep the profit. And wow. Yeah. Off to the races. It was fun.
Yeah. I mean, this is going to get controversial, but some people are pushing this thing called universal basic income, where they feel the government should give every person, every household, $1,000 or $2,000 a month to live on. But on the flip side, if you can just fix the entry point for housing to make it more supportive, where no down payment, super low, 2 point something percent interest, then in a way you're securing the highest expense of most households at a fixed price low. So it's an immense amount of of benefit where maybe you don't need to give people $2,000 a month free handouts. You know, if you can just make some smart decisions and use the free market, but just allow more people to be participants, you know, of that. I don't know. It's frustrating because if we had more competent political leaders who could just, you know, look at opportunities like this, it doesn't take a genius, and it doesn't take, you know, $100 trillion to fix it, to do something like this. You know, it's a very straightforward solution with immense benefits. It's just,
Well, I mean, it gives you net spendable money immediately. But like I asked you if you could do fixed rate rent for me for 30 years, and you laugh, go, well, that's stupid. Well, it is stupid, but guess what? That's what the loan programs are. I'm glad they're there, but because it creates just a different feeling. You just went into your home. Well, that's just a different feeling. And the more people that have that, I think the more pride they have. It's, to me, that's a no-brainer decision. And as far as basic income, I'm probably certainly against that, because I don't think that people would feel any pride in that. I think that takes away the essential thing about I kind of did this thing on my own. I want that feeling myself. I do. I don't want to be given nothing. I've always been like that. I'd rather live in a Volkswagen, you know. As long as I bought the Volkswagen, okay, I'll do that. But you know, there's a lot of people that really, like, they're homeless. There's all that thing. Okay, I don't want to create a bunch of foreclosures, but I'm trying to say that there's a way to get that to happen without. Why spend $15,000 a house when you don't have to? It's silly.
Yeah, the 15,000. You know, I mean, that doesn't do nearly, you know, as much as what a zero down payment, you know, guaranteed.
I don't even like the forgiveness of college debt.
Yeah, I mean,
you know what? I'll tell you what. Pay for it yourself. We'll give you a nothing down house loan. And when that thing, go buy it in Austin. In about 2 years, you'll be able to pay off your college debt.
Exactly. Yeah.
Yourself. Well, but that's true. That's a true statement.
Yeah.
And how do you do that without creating animosity for the couple that work 2 jobs apiece to pay for their kids' education?
Sure.
You know, I don't understand how I don't get how that works.
Yeah, it's
Is it free college going forward too? Or do you just have this square box of forgiveness and then we get charged again? So that's a can of worms, man.
Yeah. I mean, the other big expense, I think, is health insurance and health related, you know, expenses, where it's just skyrocketing. I mean, it feels like, you know, these two issues, housing and health, if you could come up with creative solutions, you could, you know, I mean, it would make massive changes. But a lot of it, I think, is leadership. I'm curious what your thoughts on the FHA program for first-time home buyers. Is that something that you encourage first-time home buyers to take advantage of, and how significant would that be?
Yeah, I mean, I'm a big proponent of owning a house. So if that's the easiest entry point for you, to me, that's good. I know there's some expenses to an FHA loan. You know, you have the protection for the insurance in case you default and all that. But yeah, I think that's, for me, it was the starting point of my wealth creation. It was the fixing of my payment for housing. That was all a big deal. When I first borrowed money, I had a $203 house payment. I mean, it was a long time ago, but that felt big. You know, 5 years later, it was a joke, you know, because my earnings went up, and it was sort of like, that's a car payment. That's great. And because I lived in California, it went up. And so when we sold that house, I netted 10 grand, and I was like, I had never seen 10 grand attached to my name before.
Yeah.
But also wonder if I could buy 3 of these instead of 1, because if that happened again, that would be pretty cool. And that's what we did. And then we adopted a baby girl, where we were going to adopt a baby girl, and they said, you need a bigger house. And so we sold 2 of the houses that we had, and we bought a 5-bedroom house free and clear. So I didn't have a house payment.
Yeah.
That happened all inside of a very tight time frame.
Yeah. Amazing. So Bruce, I want to let you go. I know you have another call, but wanted to thank you for coming on the show. I mean, a lot of people are so curious about what's going on with real estate there's a lot of, I think, noise, and there's always FUD or fear with real estate because some people think, I mean, it's one of those things where it's sent, like there's so much, I guess, emotion as well. But I love your data kind of center approach, your historical kind of view, looking at, bigger trends. I just think, you just got to have a really great balanced view. And then I think over the years, I've seen your just genuine motivation and heart to try to help people out, to really educate them.
I enjoyed that.
Yeah, and I just think that's fantastic. I mean, I really see, a lot of what you do as super valuable, and it's helped me a lot. So one story is, in 2007, I was getting married, and I was like, oh, we need a house because I wanted to fix that, that rent, that payment in. But we didn't have much money. We're over stretching ourselves, trying to borrow money from family, and housing prices were so high. And then we put in an offer, but it wasn't accepted. And then one night, and the housing, this was at the peak kind of in LA, because Inland Empire had started to maybe crack a bit, but LA was so high. And then one night I'm like, didn't Bruce Norris, didn't he say something, about, because I'd heard you speak, a few years ago. I'm like, yeah, something just clicked about Bruce Norris. I'm like, I've got to figure out what he's saying, what's going on. So I looked into this end of 2007, and I'm like, oh, that's right. He had called it. He had called the bubble, a few years ago. And I'm like, wait a minute, let's stop what we're doing here, let's push off, our house purchase, and let's really figure out what's going on. And so I started to look into it. By spring of 2008, we started to go to the auctions that were held by, and we were entering into these rooms of 300 or so, let's say, investors, maybe 200 investors, but they were just listing off, hundreds of houses, and they were just auctioning them. And I was looking at the Zillow sold price, and it's like $350,000 sold, right, in Palmdale or something, Lancaster, sold for $65,000, right? Yeah. And I'm like, this is strange, right? And so I remember I was doing 2 or 3 hours of watching these auctions, just like 70% or 75% off of last sold price. Yeah. And I'm like, oh my gosh, we're in for a major, like no one, but in the early 2008, it hadn't hit the mainstream, news cycles or anything. And I told my wife, man, we're in for the biggest, correction. And actually I connected it to the stock market. I'm like, oh my gosh, these banks are going to be in major pain. But yeah, I look back and I'm like, oh man, Bruce Norris, like you just you helped me in that point. And then in 2009 and 2010, you were the voice in Southern California, especially saying, hey, this is an opportunity of a lifetime. You had the whole concept of picking up 10 houses, getting mortgages on 10 houses. And, as just kind of like a no-brainer, basically, if you can do it. And I told my wife about that, and then we started to pick up some houses. I remember one house we picked up, it was at an auction, and we had to do some renovations, but 2 houses down, it was a Norris Group house. It was one of the houses you're
we were flipping?
Yeah, you were flipping it. But I remember you had said you always try to do the best, renovations you can. So I wanted to see myself, and I went into the house, and it was your head foreman. He was in charge, I think, of all your projects. Super nice. And he was showing me the renovations, and I was blown away because like you guys were doing stuff that you didn't have to do. Like you actually made a pantry that was like bigger, and you did, granite countertops, and you actually fixed the house as if it was like your own house. And that just really left a big kind of something to remember. You wasn't just about the profit. It was about doing the right thing too. You wanted to pass on a great house. And I've always loved kind of your ethos to help people to really see the potential in real estate, but to do it in the right way, not to take advantage of people, but there's a way to do it where, both parties can win. So yeah, it's been fantastic.
I appreciate that. Well, I'll tell you one thing. When we had those homes for sale, we got offers a lot by hedge funds. that wanted to buy those, and we never said yes to any of their offers. We always supported the local realtor,
Yeah.
the local buyers to get the house.
Yeah, amazing, amazing. Bruce, I want to, hopefully, I mean, if you're open to it, maybe in a month or two, I'd love to invite you back on to do a live stream where this is a recorded one, but if you're open to it, I know my viewers have so many questions and they'll have more questions from this video, but maybe something just to field live questions. So we'll get a few thousand people to join live, and then we'll just, maybe handle some questions. Yeah. This is the new world we live in. Instead of a physical, conference center, you could just do it over Zoom and, have thousands of people join in and be part of the conversation. So, yeah.
All right.
Okay,
Dave,
great.
Thanks, Bruce.
Me. Okay, we'll talk to you there.
Okay.
All right, bye.
Bye-bye.